Hello, welcome to Mines and Money Online Connect Virtual Mining Conference. Thank you very much for joining us for this fantastic gold panel. Before I introduce our guests, though, I just wanted to say, anybody watching live, if you have any questions, please use the chat function to submit your questions, and I will try to answer them to this illustrious panel that I have before me. Thank you very much for joining me today. We have Peter Maletis from ASI Gold and Precious Metals, Adrian Day from Adrian Day Asset Management, John Wong from Ruffer, and Maria Smirnova from Sprott. Thank you very much for joining us today.
Welcome.
Travis.
You know what? Like we've heard from Fed Chair Jerome Powell. You know, we know what the gold price is doing, which is, sort of treading water above $1,800 an ounce. The first question I really wanted to ask you guys was, where is the value in the precious metals market? Is it the raw commodity, or is it, the mining sector? I'm going to give this first question to Adrian Day. What are your thoughts?
Yeah, well, it's like we've got the conclusion first, right? Well, I think there's value everywhere, but the truth is, I think the mining stocks, now that's a big category, of course, but the mining stocks have lagged gold bullion. They've really lagged for the last 5 years, but in particular for the last 3 months, they've really lagged. So it seems to me that the real value is in the mining stocks, and some of my friends are probably not going to like it when I say this, but I think the best risk reward right now is in the senior mining companies, which are ridiculously undervalued. But the juniors and explorations are undervalued as well, but the major miners will be the first to move, and they're more certain to move. So that's where I see the real value right now.
Who else wants to? I want to add to that. I mean, not only that, but I mean, you're getting dividends. You're getting, look at the dividends from Newmont, from Barrick, from Agnico. All these guys. The share buybacks. $750 million. Barrick wants to buy back shares. Newmont they want to do $1 billion. It's really interesting, Adrian. Guys, what are your thoughts on where the value is? Maria, you look like you want to answer this.
Yeah, I would love to add to that. I actually agree with Adrian very much. And Scotia just actually published a note trying to quantify the discount that these seniors are trading at. And they're saying that the senior mining or gold mining companies are trading as if gold was at $1,432 an ounce. And obviously gold is north of $1,800 an ounce. So that's a huge discount. And as you pointed out, I mean, these companies are producing, they're making free cash flow. They are putting cash on the balance sheets. They are paying out dividends. In fact, we've seen a number of companies increase their dividends. So, I mean, there's really good things happening in the sector, and it's frustrating to see these guys that are trading at such discounts.
I just, I was on a previous talk, and I just if the mining companies were making T-shirts or sweaters, I just the valuations that they would get is just they would be the most valuable company in the S&P. Guys, what are your thoughts? We can't all agree on the same thing, but where do you see value in the mining sector?
So I agree with everybody that the large caps look great operationally and on the gold on the valuation metrics. But that being said, I will say that there is it's a bit conservative approach. I mean, if you have a positive view on the gold price, which I do, the leverage for the smaller cap names is a lot greater. And I think in a sort of counterintuitive sort of way, the large caps are losing a bit of their leverage to the gold price because of so much cash flow they're generating. So it's not that it's not bad. It's just that they're generating so much cash, they're dropping it on the balance sheet. They're paying out dividends, but they don't have the balance sheet doesn't make it look as levered to gold. So some of the smaller names have better catalysts, in my opinion. They have the ability to, the risk reward actually, in my opinion, is a lot greater there, because I think the leverage you have with some of the exploration names and development stories, as they generate sort of kind of catalysts, there's a better chance that even in a down market, that these smaller cap names can outperform the large cap names.
Mm-hmm. So John, you get the last word.
Well, I don't disagree. I think selectively I see stocks. I mean, there's value everywhere, but selectively I think this is a stock picker's market, because there's loads of stuff where genuinely you don't need the gold price to go up and you'll probably make money. If I had to try and explain why I think the market is not rewarding these companies, the two big things I see on the horizon, at least in my line of sight, one is costs. So costs are going up. In a flat gold price environment, that means the margins are contracting, if that's the case. And then the second, I think, is just the geopolitics. Whether you're looking at Chile or Peru with different elections, potential for increased taxes, I think those are some of the concerns I think that's been putting a bit of dampener on some of these gold stocks.
Interesting, because I guess the next question I wanted to ask is, with so much value in this sector, and Maria, thank you very much for that talking about Scotia, about this valuation and just quantifying this undervaluation. So like, what gets investors into this market? Like, why the hesitancy? One of the things I've heard is that the investors want consistency. Like they what happened 2008, 2011, when balance sheets were blown up, and all of these issues and overspending on projects. Is that what we need? Do we need to see consistency? Is that the only thing that's really going to get investors into this mining sector? Is time?
Well, I'll take a crack on that. We can't hear you, Neil, sorry. I'll take a crack on that. Yeah, you mentioned a very important thing, which is that investors, both retail and institutional, but particularly institutional and particularly generalists, they've been burned before in this sector, and not just once, but more than once. And if you were an investor but held gold stocks in 2011, and whenever you got out, you lost a meaningful amount of money in a very short period of time, and this isn't your specialty, you're a generalist global fund or whatever, you're going to be rather reluctant to get back in. And you tried it again in 2020 because of COVID and so on, and then blow me down, didn't the same thing happen again? So this is not exactly a sector that makes generalists, get excited. I think what's going to turn that, frankly, is when the broad market turns. So it's not so easy to make money in the broad market. And, when gold goes up, there's nothing to attract buyers like higher prices. We all know that. People aren't, especially with gold, you think, well, it'll still be there next year. There's no rush. With Apple or Tesla, if you're interested in that, you've got to buy it now, or Bitcoin. But with gold, it'll still be there next year. There's no rush. And I think there's my sense is there's a lot of, pent up buying on the sidelines, but it's in no rush to buy. But higher prices will make people come in.
Hey, who else wants to take this?
I agree with Adrian. I think that the companies had disappointed a lot of the generalist investors over time, and they're getting comfort with their operational improvements and cost containment. And I think that as they continue to see sort of consistent returns, they will start looking at these names as the sort of the proxy for gold price and giving better returns. I think the other thing that might bring the generalist investor in is more M&A. And I think, the company's done a really good job managing their balance sheets and costs, but they really haven't done a good job of kind of improving their production profiles internally. And so the need for, and when I say M&A, I'm not talking like, large scale, like Barrick Newmont type M&A. I'm talking about sort of project specifics that the companies can sort of acquire some of the development stories or exploration that backfill their profile, so they will look better over the next 5 to 10 years. So I think we start seeing sort of a little more activity, and then the generals will pay more attention. We'll get a better kind of feel for the gold stocks.
John, Maria, what are your thoughts? What gets investors into this? And we can't all keep agreeing. We gotta have some dissension among the ranks. We got conflict. Makes good television.
Well, I think, to me, Adrian touched on it, and to me, ultimately, it's the direction or expectations of direction of the gold price, right? So right now, I'm really characterizing what we're living through right now as a pause, right? We had a great year last year. Let's not forget that. These stocks were up big time, right? And as I always say, we can't have things go up in a straight line indefinitely, unless it's the S&P, of course. But, if, again, right now we're in pause in gold, in the gold price itself and the silver price itself, if we're starting to see, again, a rally in the metals, investors will turn back, investors will come back. And it doesn't, as you all know, it's a small market, and it doesn't take very much to move the market. So these things can rise a lot very quickly. And frankly, as we've already discussed, the downside is, pretty limited, given the valuations and given where the space is already.
Yeah, I can't disagree. I think the outlook for me is the key. So it really depends on your outlook on gold. I mean, I can't speak for everyone else. I'm sure you all have your outlook, but I think that drives it. And with investors, that's what they look for. And I think what this is telling you is that investors are not confident that gold is going up anytime soon. And I'm talking generalists, which is why they're not buying this stuff.
That actually leads me to my next question. I mean, as I started off, we heard from Powell. We see gold prices, sort of hovering back above. We survived the flash crash. We're back above 18, but there's really no momentum behind the gold market, especially in the short term. Just wanted to get your thoughts, and we'll start with you, John. What are your thoughts on the gold price? And it just, we talk about frustration, and it's like this short-term sentiment versus long-term potential is just, there's this wide chasm between the two. And it's like short-term and long-term. I mean, are there reasons to be optimistic on the gold price?
Yes, well, there are lots of reasons to be optimistic long-term. So I'm definitely long-term bullish. I think everything we've seen in the last 50 odd years continues. So nothing has changed, really. I know we've had pauses in the gold price before. So long-term, I'm still bullish. Short-term is quite hard because the outlook is different. I think when people talk about tapering and tightening, that historically that's never been great for gold. And probably in that environment, the dollar will strengthen. Again, that's not great for gold. So it really depends on how you view the markets developing over the next 6 to 12 months. I think that's what's driving the short-term sentiment for gold. I am not particularly bearish of gold. I don't think it's going to collapse from here, but I'm not sure if there's a lot of positive momentum. So we might be sitting kind of around here for a little bit of time, but that doesn't mean you cannot make money in the stocks.
Who else wants to take a shot at who wants to look in their crystal ball and gauge prices?
Well, to me, one thing, you just mentioned Jerome Powell, and we haven't really focused on that.
We're getting there. We're getting there. Give me some time.
All right. Well, one of the things clearly holding gold back, in addition to the things that John mentioned, is this fear of tapering. And, to me, I am just flabbergasted that people continue to believe the Fed. I mean, it's talk. Jerome Powell at Jackson Hole was, was, you know, in his inimitable style. I mean, he's just afraid to take a position. We're waiting for more information. I mean, how long are we going to wait? I think he's on hold until after he's reappointed. And then maybe we'll see some cutback in the balance sheet. I think it's worth noting that in August, we're still August, aren't we? Yes. So this month, the Fed has really ramped up their asset purchasing, and it's been not well commented on, but the purchases this month are up tremendously on the previous month. One week we had 83 billion in new purchases. And I'm a cynic, so I think the reason that they're ramping up their purchases, even though they're talking about tapering, discussing tapering, is so that they can then, you know, reduce their purchases from a higher level and say, look, you know, we said we would, and now we are. But anyway, sorry, I could go on forever.
That is very cynical. That is very cynical. But yes.
Well, why else are they ramping up purchases in the same week they're talking about tapering? It doesn't make sense. Anyway, so I think that is a big concern or a big issue. And I think there's a section of the market that is already disillusioned with Powell and more broadly with the Fed. But I think generally speaking, most investors still believe what the Fed is saying. I think their take on inflation and their insistence in it being transitory, they can't even use a normal word like temporary. They have to make it sound more sort of academic, but it's transitory. If they're wrong on that, I think that'll do damage to their credibility, frankly.
Peter, you know, what are your thoughts on the gold price then?
Yeah, no, I think we're in kind of a short-term period, like John said, where things can go either way. I think the Fed, there are a number of, you know, investors, generalist investors that are using the old playbook of, you know, the rates are going to increase, so gold should be weaker. But I think the long-term prospects are still there. I think, you know, you continue to see real rates at well over -1%, and I think that's supportive of the gold price. I don't think they can raise rates quick enough to pull the real rates higher. And then at the end of the day, the dollar is in a secular kind of down market, and I think the dollar support for gold is going to break down, continue to break down, and gold will be an asset that people will continue to want. I think I agree. The Fed is they're kind of putting themselves in a corner where they are not going to be able to do what they need to do to support the economy, and I don't think they can raise rates without putting some fear in people. So that's.
Maria, you get the final say here.
Well, I think you know, that my thoughts have been largely covered, but I always go back to, well, why are we in this situation, right? Why has the Fed been forced into a corner? And why do we think they can't raise rates or taper? And I don't think they can raise rates. We have debt to GDP ratios of levels not seen since the Second World War. I mean, that's a very long time. We have had just a mountain of money printed in the last year and a half. How do you reverse that? All the good numbers that we've seen, I would say, you know, the GDP growth, and by the way, let's remember, GDP growth disappointed by almost 2 percentage points in Q2, right? The City Economic Surprise Index is negative. So we've had this mountain of stimulus that's created growth and created inflation and created job growth. What happens going forward is, you know, I would say we're going to see, and that's consensus by now, a weakening in all of this stuff, right? So can the Fed raise rates? No, but Powell isn't even talking about raising rates. He keeps walking it back, and he keeps saying we need to see more data, like Adrian said. But again, the data, the economic data that's coming in is not supportive of them raising rates. And that's the important part. And we are in twin deficits, right? There underlying deep factors of why growth has been slowing and slow. We've been in it before COVID, frankly, right? growth was slowing before COVID hit, and that's very important to remember. And that, to me, is the outlook on gold hinges on that. How do we view economic growth going forward? How do we view employment going forward? There's a reason why Powell harps on employment and unemployment, and the fact that the lower income class has been affected more and certain economic groups have been affected more. These are all issues that the Fed thinks about, and they don't take that economic disparity lightly, I don't think. I've heard it over and over again from him. So that's why I agree with everyone. I don't think that it's going to be as easy as pie to taper, and it's not going to be easy for them to raise rates.
But I just want to throw this out there. Sorry, no, I just wanted to throw this out there too. Like, thoughts of, like, do we need to get the tape? Like, it feels like the more we talk about it, the more gold treads water. Like, to me, it feels like we need to get the darn thing over with. And then we can focus on the fact that, the balance sheet is at above $8 trillion. This is not, even if they taper, that's not going down anytime soon. Like you guys say, interest rates are not going up anytime soon. Inflation is not going down, and that means real rates are not going up. It feels like we need to get, part of me is just, I want the Fed to taper just so we can get over it and move on.
I think you're absolutely, sorry, John, go.
No, I was just going to say, I agree with you. I think that's the stalemate we're in, kind of, because the market still believes the Fed, whatever we think. And so they're still playing this game. I do agree with Maria. I don't know if they're going to be able to raise rates very much, in all honesty. But the market's waiting for the Fed to either say so or give up. But we haven't quite tested that yet. That's the bit of the problem.
Well, we've seen before, actually, when it's a matter of, in case of gold, sell the rumor, buy the fact. We've seen before, but when the Fed actually takes their first actions in raising rates, then gold actually bottoms and moves up. And I think we're going to see that this time around, because we've had so much talk about tapering. And as you, Neil, sort of alluded to, anything they do is going to be and John too, is going to be relatively minor. We're not going to get positive interest rates anytime soon. And so when the Fed starts cutting back on the balance sheet, they'll just be reducing the rate of growth. They won't be going from 8 trillion to 7 trillion to 6 trillion. That's just not going to happen. If they raise rates, the market's going to realize that they're behind the ball again. So they'll be raising rates, but always lagging inflation. And so I think that'll be positive. I agree with you completely. When they start, it'll actually be positive for gold.
Peter, did you have thoughts on this?
Yeah, I hate to agree, but then we're not even talking about COVID and the effect that, there's a lot of potential sort of catalysts or, craziness that could go on geopolitically. We still really don't have an idea. We're trying to come out of the COVID sort of doldrums, but things are heating up again out here in the States and globally, and we just don't know. The uncertainty also helps support the gold price. So I think we're all sounding like broken records, but I think there's a lot of sort of uncertainty that is still very supportive of the gold price.
That actually brings me to a question we got from the audience. Thoughts on geopolitical risks. Mentioned Latin American elections. We have turmoil in Afghanistan. Hasn't really. The interesting thing about geopolitical safe haven demand for gold is it goes up, but it's not really sustainable in the long term. And we actually aren't really seeing much safe haven demand, when we think about, what's happening in the Middle East and Afghanistan. And so what are your thoughts on geopolitical instability and its effect on the gold price? Maybe John, if maybe you can take this question.
So I think it depends on what's the cause of geopolitics. So generally in a war, it's reasonably positive for gold, but short-lived. Usually it doesn't last for very long, unless, of course, we end up going into something like World War III and it's going to last for many years, something like that. But if it's a skirmish, it doesn't last that long. So I think the Middle East side, in terms of geopolitics, I don't know if that's going to have a very lasting impact on the gold price. The bits which I find more interesting, which is COVID really, and the impact of these COVID restrictions on individual countries, particularly emerging markets. So unlike, say, the Western world in developed markets, some of these countries don't give any subsidies to people as a result of the COVID lockdowns. So they may lose jobs, they may not be able to work. And when all these things happen and people starve, that's when you get to civil unrest. And then the politicians and governments are forced to take some kind of action, which may be increased taxes or supportive of unions and things like that. So for me, that's where the geopolitics actually heat up. And depending on the country, I mean, some will be worse than others, depending on where they come from. And I think that Peru and Chile stem from that kind of issue. And the impact that would have would be potentially disruptions and taxes for me.
No, I think
Who wants to?
you've obviously hit on one key point, whether a geopolitical event is temporary or probably longer lasting. And then you hit on another key point, which is, does that mean that the authorities will respond in a way that's positive for gold? I think there's a third factor with geopolitics as well. I looked at this now, admittedly, it was about 10 years ago, but I looked at it over a period of a quarter of a century. And what I saw, which is not surprising, but what I saw was that if you have a geopolitical event when gold is already moving up, it has, excuse me, it has a much more positive effect and longer lasting effect than if you have a geopolitical event that you can rank as similar when gold is in a bear market. Mm-hmm. So you only have to look at the Iran hostage situation, for example, when you know, 1980, and the effect that had on the gold price. But I think that's another factor.
Just keeping on with geopolitical, you know, I guess risks to the mining sector. I mean, you know, obviously, you know, geopolitical, it leads to jurisdictional risk as well. What are your thoughts on this? And you know, like, is, you know, how important is this when looking at the mining sector? Maria, maybe you can take this one.
Well, it certainly is important when we consider individual investments, and but I think it's reflected in valuation. You know, a West African producer will not be valued the same way as a Canadian producer, right? So we know that Australia, Canada, USA attract premium valuations relative to other areas of the world, as an example. And like I said, so, you know, when we consider how to position the portfolio and how to allocate capital, we take that into account. And we try to make sure that our portfolios are not skewed to, you know, to the extent possible. Now, of course, we also have to look at geology, and geology, you know, you can't move a deposit, right? So for certain things, and particularly this applies to silver for me specifically, you know, there's certain areas of the world that are more rich in these metals than other areas. So you kind of have to take all of that into consideration.
I look at, you know, geopolitical sort of diversification is something you always look at, and I think that's part of looking at a broader portfolio where, you know, you'll take some, as Maria said, the geology is what it is, and so sometimes you have to look at certain assets and get comfort with it, but you use your portfolio to diversify away that, and so, you know, there'll be times where it's, you know, the risk reward is just necessary, and you need to look at certain jurisdictions because the asset's so great. But if you have it in a broader portfolio, like we all manage, that sort of helps kind of temper the issues you could potentially have with some of the assets.
I was just going to say, Neil, one of the other interesting aspects about this kind of geopolitics is that we may get disruptions of supply, which is actually very positive for the metal. As long as you didn't pick the company that was in the country where the geopolitics flared up, okay, which is quite unfortunate. But if that wasn't the case, so for example, I guess with Chile, going back on that, that's really put a real kind of fire into copper, because a lot of people are concerned that if they did have any severe geopolitics in Chile, which affected mine supply, then copper is going to go higher. So things like that, it does help the actual underlying commodity.
Wanted to go back to prices. Question, we all agree that gold, it's kind of it's treading water right now. It's keeping its head above water. Is there a path to record highs, or even is there a path to $2,000 gold for this year? Is it just time running out? Do we need to push that to 2022 now? What do you guys think? Peter, let's go with you, Peter.
I mean, I think the seasonality of gold is always going to be sort of something to pay attention to. And August is historically one of the kind of weaker months, and we're going into a period where, the markets are starting to get, will people start getting interested again after they get back from summer vacation? I think there's a lot of decisions that need to be made. So I think there's still a path to 2,000. I think the later we get in the year, obviously the harder it is to get there. But I think at this point, it's really becoming a momentum to that price rather than sort of the question if we get there. I think the markets have been so quiet, more quiet than we usual. I mean, I think we've all done this for long enough that we're used to this sort of August doldrums or late summer doldrums, but it's eerily quiet. And I think people are starting to come back, and we have a potential to go much higher.
Maria, Adrian, John, who won? Any follow up on that? Sorry, Maria, go ahead. She buzzed in first, John.
I think I'm just surprised gold hasn't reached 2,000 given the economic situation and the monetary situation we're in and have been through in the last year and a half. Maybe just such a big psychological number that maybe that's why it didn't go there. But I'm just surprised that we're not higher in gold than we are right now.
I did like, just to follow up on that, I did like what you're saying about, last year was a phenomenal year, so like, is this just part of the consolidation? Like the consolidation has lasted longer than expected, and I think this is something that Adrian's talked about too, is, I've talked to him about this, is, you can't, there needs to be you need to take some of the froth out of the market. And maybe it's taken a longer time, last year to take this froth out. Maybe it's taken an entire year to get the froth out.
Yeah, I think that. I mean, when you look at from March to the end of July last year, gold in dollar terms up, 44%, I think, something like that, in 4 months. I mean, that's astonishing. Gold is not Tesla or Bitcoin. Gold doesn't do 40% in, 3 months, really. And so I think, and then given the fact that there was so much buying, obviously, close to the top, people lost money very quickly. I think the dynamics of the market simply say it takes a long time to get over that. And people who are thinking of buying, likewise, see no rush to get back in. And so you have those two factors playing on it. So I definitely think that's a factor. We've probably played out that factor by now, I would think, a year later. But I definitely think that was a factor for all of, for the balance of 2020.
John, you look like you want to say something.
Yes, I think, for me, I think, it'll be tough to push through 2,000. I'm actually very surprised on a few things. So the negative real rates is something I follow fairly closely. And if you look at the negative roll rates, the rates are on the floor, actually. Normally, that will mean gold is actually higher, like much higher. So that has really surprised me this year. And the positioning of gold is a lot lighter now, actually, both in terms of the specs and actually the ETFs. So for me, that's actually quite bullish. So when I put the picture together, I feel relaxed with gold. I can't see it collapsing per se, famous last words, but I can't see it collapsing from here. But whether it has the momentum to push through 2000 in the next 3-4 months, that I'm not sure.
Do you think the flash crash then represented the floor in gold? I mean, do you think we need to test maybe a little bit lower? We need to sort of test this. Like, I agree with you. Maybe no collapse in the price, but I'm just wondering if we need to really test these new floors in the gold market. Peter, thoughts?
I think the flash crash was just sort of, I think anytime somebody decides to put that much selling pressure on a commodity on a Sunday of at least the Western Hemisphere, it makes it really hard to base that on anything. So I think I believe that was more of an anomaly than anything. I think sort of the basic price level
was that a fat finger, or do you think it was actually like somebody just wanting to dump their gold?
I don't know. I don't believe it was a fat finger, but I think there was somebody that wanted to get rid of a large amount a lot quicker than most people would be able to think about doing. So I think it's one of those things where it's, I think the base level is much higher than this, or higher than the 1700 level we reached when that happened. I think it's closer to right around the level areas right around here, around 1800, 1780 to 1820 is kind of where the range we've been in, and I think that's where we're basing and hopefully going higher.
Rest of you guys, what do you think? Where's the floor in gold then?
I think we hit it already. So that's why I'm not expecting much of a collapse from here. I think we've hit the floor. Would we test it again? Never say never. It's
Friday.
Always possible. Right?
We have unemployed. We have non-farm payrolls Friday. Come on.
It's always possible. But the fact that the floor has held a few times, you want to call it that, leads me to believe that there is some buying. Like there must be some big buying down there. So I think it's in the price already.
I agree with that.
Maria, what are your thoughts? Where's the floor in gold?
I hope you guys are all right. I hope you are right. That's all I'm gonna say. And I hope there's no more, flash crashes and somebody trying to sell, I think it was 4 billion worth of gold and when nobody's around, which is uncanny. But to me, the chart looks like it's consolidating, right? Gold is consolidating. So again, can't go in a straight line anywhere, up or down, right?
I think we're all amateur technicians. I think Maria brings up a good point. It's consolidating. I think we all have to pay attention to that. But I think a lot of the technicals over the last week have been positive for the gold. If you're looking at the technicals.
I know this is the gold panel, but I also wanted to just mention silver as well. That's another frustrating trade right now, or investments. Throw everything that at the start of the year in February, the whole Reddit movement and stuff like that. But it does feel like silver is significantly. We think gold may be undervalued, or silver just seems really undervalued, especially when you look at industrial demand. If global economy is slowly improving, everybody's talking about solar panels and that growing demand. It feels like silver should be a lot higher than what, $23 an ounce. What are your guys' thoughts on this metal? John, I'm going to kick it to you.
Okay, I'm reasonably constructive on silver, actually. I think you hit some highlights for me in terms of industrial demand. I think that's still growing. And even if you look in history in terms of the gold-silver ratio, it's not is not at a stretch. But the funny thing, okay, maybe this might be different, but normally silver tends to outrun gold in an up market. And so what I think the silver price is just telling you is that short term, because of the lack of interest in gold per se, is kind of drifting into the silver market. But that doesn't change its outlook or its fundamentals. I think as soon as you see perhaps gold start to pick up, then the silver price will probably have its day.
Maria, what are your thoughts on silver?
You probably know that we're huge silver bulls, and we offer
Only just a little.
that gold coin should be really a silver coin. We offer a number of products in Silverland, and I don't disagree. I do think silver should be higher, but if we think about how far it's come in the last year and a half, silver hit $12 in March of last year. In March of last year, I had a very hard time talking to people about silver. Silver was thrown out for dead. Nobody wanted to talk about it. Fast forward a year, and there's a lot more interest in it. If you look at investor inflows into the ETFs, into coins and bars, it's held in much better than gold, right? So, the price of silver is double of March of last year. That's a positive right there. So the companies are making better money at it. Excuse me. The other thing I will say is silver is becoming harder and harder to find. And that is seen in the industry. We're not seeing as many silver discoveries. We're not seeing as many new mines in silver coming in as there are in gold. And as you probably know also, a lot of the silver companies are now really mostly gold companies with a bit of silver on the side. And that just speaks again to the rarity and how difficult it has been to find silver and put silver mines into production. And that longer term is definitely a good thing for silver. Speaking on the demand side of the physical metal, again, we've seen so many positives. Obviously, the solar has done really well, and it's continuing to do well. Last year, the solar sector was the one sector that did not reduce in the amount. It held in. And in fact, the consumption of silver grew 2% last year in solar. And that's going to continue. Increases in auto demand, increases in networking demand. All of these things are really positive. So, we maintain that we do love silver, and we're pretty bullish on the outlook.
I obviously will defer to Maria on a lot of the silver stuff because it's more kind of area expertise. But I'm more of a gold guy than I am silver guy. But I am more as constructive on silver as I've been in a while. I think from an equity perspective, I think it's harder to, like she said, it's harder to find kind of direct exposure to the silver mining companies, and so that makes it a little bit harder. But there are some, there are newer names out there that are giving you good exposure to the silver price because these historic silver companies are becoming gold companies. So finding that type of exposure is hard, but they're starting to come out.
And that's exciting. That's great. I love seeing them. Right?
Yep.
I mean, I always say that to me, what excites me in the sector is exploration. And when money goes into the ground, when people start drilling and finding ounces, that's the most exciting thing you can find. And I think what, Peter, you're alluding to is that we're starting to see that, and that's great.
Yep.
Do you like, and maybe Adrian gets this question first. Do you like gold miners or silver miners? Like how, like what, or if you're going to create a basket, is it 50-50, 60-40, 70-30? In the expressed idea too that there aren't a lot of pure silver plays, and every investor is different. But I'm sort of wondering how would you balance out a mining portfolio?
Well, in our gold fund, we are restricted to a maximum of 20% silver. So, the question.
So 80-20.
Well, it's a gold fund, so we have to be 80% gold. So it's 20% silver and cash. So the question of where I would like the balance to be is sort of moot in terms of the fund. But we've hit on a couple of points. There are very few there are relatively few pure silver companies. Some of the companies we might want to buy are 40 or even 30% silver, and the rest not even gold, but zinc and tin and other things. So, and those companies are beginning to lose their premiums, I think. Silver companies have already had so that's the one factor, how many are pure companies. The other factor, frankly, is that, you look at the gold space, there are just thousands and thousands of companies, producers, explorers to choose from. And there's some great gold companies. You look at the silver space, and it's a much smaller space of companies that we can legitimately call silver, even if we include the companies that are 30% silver and still include them. There's just far fewer of them. So I guess the point I'm making is that you have fewer companies to choose from. So inevitably, gold is going to dominate a precious metals portfolio. Inevitably.
Maria, or toss up between Maria or Peter. How would you develop a precious metals portfolio?
I agree with Adrian. I think, my mandate is precious, but at the end of the day, it's really hard to find a significant exposure. I have a number of names that have, started to perform quite well and are decent sized holdings because of their silver, and they're primarily silver companies, but you really can't put together. It's hard, and I imagine Maria will sort of reiterate, is that it's hard to find names to put in a silver portfolio that, the quality of these assets, is hard. And some of the bigger companies, they're okay assets, but there are some newer ones that we're finding that are really exciting, as Maria said earlier. But it's hard to really go over 20% and outside of gold for me.
Anybody else?
I would agree with that. I mean, I do have a product that I manage. Or we manage, I should say, and it is specifically silver equities. But in terms of a more general precious portfolio, yeah, I would say 20-30% is probably as high as you would go.
So we do actually have to, we're running out of time. We're less than 3 minutes here. Just wanted to really quickly ask you guys, go around the table. I'm going to start with John first. When do we see rate hikes? Do we see rate hikes in 2023? What are your guys' thoughts, John?
It's so far away. I haven't given that a lot of thought, I have to be honest. Yeah, I pass. It's going to be a long way away.
Okay, only John gets to punt. I want to know when liftoff is coming. Who's going to take this next one?
Well, I'll say 2023 at the earliest. We're going to see balance sheet reductions, as Powell himself said. We're going to see balance sheet reductions before we see interest rate hikes. So let's say 2023 at the earliest.
Peter,
I'll take the bait, and I'll say that I think they will attempt to raise rates before the end of 2022. I think they'll have problems, and the academic side will hurt them, and they will realize that they made a mistake, and so that could cause some problems for further rate hikes.
On that, are you guys surprised that we actually haven't seen a taper tantrum like 2013? I mean, last time they were talking about tapering, equities were just, volatility in equity markets were off the board. Maria, and your thoughts on rate hikes?
I second everyone else. 2023 maybe. I mean. But in terms of taper tantrum, I think nowadays the Fed is so conditioned to telegraph everything to the minutia and to telegraph intentions before the intentions start. I mean, where do you begin? It's become a constant dissecting the Fed statement exercise, right? So I think they massage and manage everything to the extent that that's what's prevented the tantrum. And at the end of the day, and Adrian touched on it, the balance sheet expansion continues unabated, right? We're still handing money out. And for as long as that continues, why? I mean, why would the stock market react, right? Is it just plugging along as it should be, right?
And just before we go, I mean, do you think that is maybe the spark that ignites a new rally into gold? Like, do we need to see equities sort of come off this historic record high after record high rally?
I think it'll help, but not necessarily so. So it depends on how deep the decline goes. So if you think the equities will drop 30%, then I think, yeah, for sure, gold will have a turnaround. If it drops 5%, I don't know if that would change the overall macro picture, I guess.
Just, I mean, if the market sells off, I mean, gold eventually will do well. But as we've seen, when the market sells off, everything sells off. It's a liquidity issue, and people are raising capital. So, I mean, be careful what you wish for if you're looking for a market collapse, because your portfolio, even if it's heavily invested in gold equities, will still probably underperform temporarily.
Okay, I think I can squeeze one more lightning question in here. Friday non-farm payrolls. Does gold hold 18? Do you think? Because I'm on the mind that employment's going to still be really strong in August, and I don't know. Again, it's all this tapers on, tapers off, tapers delayed, tapers coming in September. I feel like gold might not hold 18 if we see a really good number on Friday.
Yeah, if we have a great number, then we'll see a similar reaction that we did last month. But I think it'll be temporary as well. It's going to be a knee-jerk reaction.
So buy the dip.
Buy the dip.
I mean, I agree. I think there are people out there using the usual playbook for the way that they look at gold and economic data, and so. But I think the people that are kind of longer term looking at things will realize that that's sort of a blip.
That is perfect. Peter, Adrian, John, Maria, thank you very much for your time. I've really enjoyed this conversation. Your outlook in this market has been fantastic. So thank you very much for joining me today.
Thank you, Neil.
Thanks for having me.
Thank you.